timing is everything. When you become a baby boomer, you know that timing becomes very, very important. So we're getting to a point where timing is probably something we need to pay attention to. We're getting notices a month ago from CoreLogic, which is the real estate statistical company, saying that in the 50 markets across the country are overpriced. I happen to agree with them. I think we're pretty optimistically priced on a lot of things, even here in Maricopa County, the #1 growth market in the United States. But we're seeing things happening on the some of the markets that have really gotten ahead of themselves. San Jose, Silicon Valley, Seattle, Portland, San Francisco. These areas have really, really had some price appreciation, and we're finding out that last month the prices actually declined. Now, 1 month is not a trend, but it's something to pay attention to. And I'll tell you what is a trend is that today we got notice that for the 6th month in a row, pending home sales year over year have declined. So we definitely have a trend there. So what we need to be concerned about is the fact of timing. So I'm thinking we're very, very close to the top of the marketplace. Now, I'm not expecting a huge decline, but we could very well have a little bit of a price decline. So if you have a marginal property that needs to be sold, now's the time to do it. And when I say a marginal property, I'm talking about something that you don't like, something that you wish you never would have bought, something that doesn't rent very well, something that needs work, maybe something that needs to have some updating done and you don't want to do it. If you have any of those properties, you really need to sell those. If you're thinking that you need to move, that you're going to move in 6 months or a year, you might need to accelerate that now in order to pick up the top of the market. So I think the prices will be higher now than next year. So if that's a possibility, you may want to do that. Now, we're having here in Maricopa County a tremendous vector of population coming from Southern California. So in Orange County, we're having just a influx of people that have sold their home in Orange County for $800,000. They're coming to Maricopa County, paying $400,000, getting a nicer house in probably as good a neighborhood for half the price. That gives them $400,000 to spend, to put in the bank, and if you talk to me, we'd be buying some investment property for you with that $400,000. So we have a huge influx of Californians coming. If you're in California, now would be a very, very good time for you to sell. If you're in New York, good time to sell. Some of the smaller counties, if you're in some of the less, how should I say, populous counties, it's time to sell as well. And if you're going into one of the better counties, you're going to have some decisions to make. So it's nice when you're coming from a more expensive market to a lesser expensive market. When you're coming from lesser expensive to a more expensive, we need to make some considerations. So let's say there's certainly a difference between an investment home and a family home. So if you have an investment property, you probably want to sell it in any of these marketplaces, and let's get it into a better market. Now, keep in mind, when we say sell, we're really typically not going to take the cash. We're going to do a 1031 exchange, and we're going to avoid a taxable event. A taxable event generally costs us 20% in capital gains and 25% in recapture. So it's a reasonably expensive proposition for us. Once we move into a better marketplace, we can change your tax rates, we can change your depreciation schedules, and update it and get you into a better marketplace. That's a very good move. When you go into a family home, family homes are different. You know, we have different parameters to think about. So if you have a possibility, you may consider renting for 6 months or a year. That way, hopefully in a year or so, you might be able to capture better pricing. Now, sometimes this isn't feasible because we have children and we have dogs and pets and boats and toys, and they need to be placed somewhere where we need a house. Well, that might just be the risk that you run. As long as you're willing to stay for 5 or 6 years, I think you're going to be fine, because I think that the market will be significantly higher 5 or 6 years from now. I just think that there's going to be a period of time, maybe 24 to 36 months, where prices will be down. If you wait 5 or 6 years, I'll be fine. So timing becomes a strong consideration. So if we can help with our timing models, if you'd like to brainstorm with us, if you'd like to talk to us, we're more than happy to. My very best to you. Bye-bye now.